Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show and let's explain you which company we'll be talking about. But before that, I'll give you some hints. Try to guess the company. It's a staff solutions company. That's the first hint I'm giving you. The second hint is that it was recently demerged into staff solutions, tech and facility management. So there are three arms of it, but of course we will be dealing with only one company today. It's the beneficiary of the GCC, the Global Capability Services explosion in India. That'll be very much interesting. But for the shareholders post the demerger, the stock has been under the correction mode. So definitely testing the patience for the investors invested in this stock. But the query remains is, guess the company, or should I say Quess the company? Yes, the name is Quess Corp. That's what I'm talking about. The arm has been demerged and this is only focusing on the staffing solutions business. So that's what we'll be looking out for. But why have I chosen Quess Corp in KYC? It's pretty much interesting, and yes, AI buzz flow and the AI impact in the IT industry and staffing solutions is also a very key question which we'll be posing to the management. The seasonality impact was there in the third quarter. So let's see whether that Q4 numbers come up properly or not. So it's a mixed set of numbers which has come in. So that's the query we'll be asking the management. The second is the contract realizations timeline, how they actually pan out. New contracts start coming in. Has there been a delay in it? The year has started. So this becomes very important for a staffing solutions company when you analyze. Third important part is the margin outlook for the staffing business. Will that touch the double-digit mark? Is the ROC numbers going to increase? Any kind of shareholder return, or you could say a reward coming in from the company? That's what we'll be looking out for. Also, apart from this, why we have got this company is the labor code impact. It's one of the largest companies where the labor code impact is strong because their entire business itself is on staffing solutions and the outlook ahead for this counter. Also, we'll be on the show, we'll have Lohit Bhatia. He's the CEO for Quess Corp, where Lohit will answer all the queries which we have posted and something on the industry also, especially on the AI front. So this is what's there on the show, but I'd like to point out about the details of the company that you should be knowing. Generally, the mid-cap space, the analyst communities do know about it, but for the people who are tuning in for the first time in KYC, I'm going to explain you what this company is all about. It was founded in 2007, almost a 20-year-old company in Bengaluru in India, and largely they are focusing on general staffing and skill formalization. So this is a very important cog in the wheel for the economy in India, especially in this space. And also, let's look at the primary product. What are the key offerings? What does Quess Corp actually do? The main offering is the general staffing solutions, and this is for the blue-collared roles going ahead. Now, how's the business model? It's very much important to understand. There is a fixed element, it's a cost-plus element, and a fixed fee contract. So that's where these contract works. And where are they covering which industries? This includes BFSI, retail, and manufacturing sector as well. I would be interested in the manufacturing segment. Other projects are also there where they do solutions for IT and the GCC roles. And the overseas staffing, they also have an overseas business in APAC, that is nothing but Asia Pacific, Middle Eastern region, and the digital platforms as well. They have some names, Hamara HRMS, Taskmore Gigs. That is something which you are looking for, especially in the flexi cap staffing, something like a gig economy to simplify it. So these are the important setup which is looking very strong, especially the GCC segment. There's a massive explosion happening, and looking at the revenue model, this is of course on the deployment and the payroll fees. Professional services, they contribute the highest margin. Look at that, 11.6% for this industry. But how does the Q3 numbers actually pan out in terms of the revenue contribution? We are having the general, professional, and the overseas. So this is how the breakup looks, and it's almost 50% coming in the general segment. The professional, if you look at it, that's 30%, and the international business, that's growing. That's around 20% in the Asia Pacific and the Middle East as well. And largely, core business staffing and workflows management is something they are positioning themselves as, and it's, of course, in terms of numbers, it's India's top staffing firm post the demerger. Overall workforce is very much important if you judge a company like this. That's around 5.5 lakh associates are there. And there is an AI angle to it as well for hire to retire. That's a very interesting, tagline coming in. But let's give in the important setup of how the KYC ratings look. There are 8 ratings where we judge a company in KYC. To put that in perspective, of course, the financials are the most important. That's why we have income statement, balance sheet, cash flow, and return ratios. But apart from that, we need to get the entire story. So we pick up the shareholding to see whether institutional change has happened over the period of time. Street cred is the stock reaction, and the valuation as we compare that with its peers and the analyst take. What is the analyst community talking about? But the first one is the income statement. And just to give you a clarity for our usual viewers, for KYC, generally we give a lot of numbers. But remember, the company has demerged. So we have to compare them apple to apple basis, and that's the fairness we give in KYC, not the old numbers. These are the important numbers looking like, and of course, there was a big dip coming in the PAT for FY25, the impact coming in. Q3 numbers also, if you look at it, they have been kind of on a mixed basis. There's a seasonality impact to it. And the history right now is still on the lower side. The PAT that went up 7% sequential basis, and revenue is also decent. This is 3% sequential basis. Nothing great about it, but let's give it more time to judge this company because it's just come out from its demerger. It's not been so long. So it's a neutral rating when it comes to the income statement. Also, let's talk about the balance sheet. We have taken out the key elements for it, and of course, this is the demerged part of it. I keep on reminding you that so that you understand how simple this is to analyze this company. Net worth has been strong, cash bank balance, you see all of them are reducing. But remember, this is the demerger impact. So there's nothing wrong about the balance sheet here. That's all wanted to clarify for our viewers in KYC. Still, it's a neutral rating. It's a cash-heavy business, and generally these kind of businesses do buybacks also, and they give returns to shareholders also. But that's a different story for a different day. Today, of course, is the cash flows. That's very much important as well. These are the lower numbers coming in. There is a little bit of variability, but it is still a very stable business model if you analyze something like a Quess Corp, staff solution companies. So generally the cash flows are not a concern, but still it's nothing very great or very bad. It's neutral. So cash flow is also neutral coming in. So all 3 financial numbers has been neutral, and there's a short history also for the company. That's why we are giving a balanced view. ROC numbers, that's where my concern comes for a company like this. At least a double-digit return ratios is something which we'll watch out for. Company, of course, going ahead has stated that the return ratios will be coming back near the double digit. That's what we are also hoping for. But currently, it's not coming. This is the past data I'm talking about, and that is why I have given this a thumbs down. This is, of course, applicable for both the return ratios, ROCE, return on capital employed, and the second one you're seeing, ROE, return on equity. So it's a thumbs down when it comes to the return ratios. But let's also talk about the overall shareholding. That's also pretty much important. Okay, this is over here. And largely we see what's happening here. The promoter stake, that's very stable. But FIs, DIs, that's where the changeover is happening. You see in March, it's around roughly 15%. Now they have been selling. Now it's down 9%, significant sell-off of 6% stake. But DIs have been absorbing it from 9% or 10% is up to almost 13%. And retail participation has also gone in. So net, it evens out when I talk about the shareholding pattern. So it's a neutral rating when it comes to the shareholding segment. Also, apart from that, let's talk about the street trade. What returns have come in for the stock? The last 6 to 8 months, it hasn't been very great. To be honest, last 6 months, the stock is down 27%. And if you look at it, it hasn't done much. Let's see the other share performance parameters as well. It's largely been flattish this year. And its Q3 numbers are also out. It's kind of mixed, so nothing great happening in the markets for about this last 1 year. It has seen a downtick coming in its prices. So yes, it's a thumbs down for the street cred as well. Let's talk about the valuations, how things pan out. And there are just 2 large players. There's Quess Corp and TeamLease, and we have taken the valuations of PE ratio over here for FY26. It's around 15 times compared to 18 times its peers. For FY27 also we have taken the earnings. This is actually much better to track. It's cheaper than its peers. Nothing much to major compare. It's around 13 times its trading. So yes, the valuations are attractive, be it its historical averages or even its peers. So it's a strong thumbs up when it comes to the valuations front. We see it's a very decent kind of a numbering coming in. Nothing much happening here. It's largely neutral. Concern for me comes is return ratios. When will they start coming up? That's the management Q, we'll be asking Lohit as well. Also, let's see what's happening in the other segments. Shareholding, it's been largely neutral. Street cred, it has tested the patience of the investors. It hasn't come in. The returns haven't come in. That's why it's a big thumbs down from my side. But the valuations are eye-watering. That's why, early teen valuation coming for FY27. That's where the interest comes. It's a stable business model as compared to a lot of global or export-facing businesses as well. And analysts, all of them are bullish on it. There's not a single sell call. So overall, the rating parameters we have added, it comes to roughly 4 out of it. It's kind of a neutral rating going ahead for this company. But yes, bullishness is there for the future and a stable business model. Also, let's talk about the management. So Lohit Bhatia, he is the CEO at Quess Corp. He will be joining us, and looking at his street cred, he has joined the company in 2011. He was just a general manager of sales, and then he has elevated himself over these years. 25 years of multi-industry experience, and importantly, he is the president of the Indian Staffing Federation since 2020 as well. Now, to talk into details about the company's outlook, I had a chat with Lohit Bhatia. He's the CEO at Quess Corp. Listen into that conversation.
Hi, thank you and good morning. Glad to be on your show and to be speaking to all your viewers. This has been an interesting quarter for us. We set out a few objectives for ourselves and we almost met all those objectives. Number one, we ended the quarter at 483,000 deployed resources with various customers of ours. While this is up 3% along with our revenue, which has come in at 3,930 crores, we've also delivered an all-time highest milestone of 80 crore of EBITDA. This ended 4% for the quarter and 28% for the year. If you see our adjusted PAT, which has a one-time impact of the labor code, as you know, which has happened in this quarter itself, has come out at about 62 crores PAT for the quarter, 19% up quarter on quarter, 29% up year on year, giving us a 4.1 rupee per share EPS for our shareholders. At this stage, we also ended the quarter at about 325 net cash position, which is healthy for a company of our size and our balance sheet. We were impacted by only one event during the quarter, which was post-season. There was a pause in the market because of the labor code. As you know, the government of India has announced labor code in this quarter itself, implementation from November. And because of that implementation, we've had over 900 plus different interactions with our customers to socialize and to explain them, A, what is the impact of the labor code, B, what will be the impact to wages and to other incidental calculations, and C, going forward, how would we structure the entire workforce management solutions? So that has been a one-time impact.
All right, so there's a one-time impact coming in, but Lohitji, the contract realizations, how they are actually panning out, will we see some kind of lumpiness in Q4 or is it distributed evenly?
So again, a great question. Typically our business peaks with Diwali or pre-Diwali, and then there is a small little destocking which happens for about 2 to 3 weeks, before which the customers open the mandates for the new season and start climbing in Q4 as well. This time, as I said, there was a temporary pause because of the labor code, but we feel as we've entered Q4, the conversations which were paused in Q3 have restarted in Q4. So the new contracts, the transfers, the transitions, the new hiring mandates that we were expecting to do immediately after Diwali has got reset and rebalanced into the quarter 4. I must also add that this has been, from a balance sheet point of view, a very strong set of numbers for us. We did inform the street that our EBITDA to OCF realization is now at 92%. We've been a great place to work, 7th year in the row in this quarter. We should end the year close to 20% ROE. And we've also crossed a margin of 2.03%. And hence the board has accepted to give a dividend of 5 rupees, which has already been communicated to the street.
Yes, that's a pretty important commentary coming in. This is what the shareholders like to tune in for KYC, to give the entire picture the way you have put in. Lohitji, the double-digit margin outlook for the staffing business, What are the timelines for it? If you could, we can have a look on that.
If you really look at it, we've clearly stated out that our goal continues for our size and scale. Our goal continues to be adding double digits in both headcount and revenue, with accelerated benefit towards high teens growth in EBITDA as well as PAT. And that's something that we've been working towards and we've been guiding towards. I'd also draw your attention to the fact that two of our a very important segments, that's the professional staffing as well as the IT staffing, has seen considerable EBITDA expansion. Professional staffing, which is our IT technologies business in India, has grown 42% year on year. And our international business, which is outside of India, has grown 26% on EBITDA year on year. At this stage, our professional staffing business now delivers a 12.5% EBITDA margin, and our international business delivers a 7% EBITDA margin. So we would like to continue building on this foundation that we've already done as we enter into the new financial year soon.
Interesting. And Lohit ji, one more query is there, and this is an industry perspective query coming in, especially in the IT industry. AI is coming up. AI impact is happening and a lot of layoffs are there. So what are the initial trends looking like, the way AI is replacing a lot of talent? Does that actually impact the industry going ahead, especially India focused? And then of course we'll talk later on the overseas business as well.
So it's a very important shift which is happening in the industry and in the world. First, AI becomes a massive acceptance and accreditation towards productivity enhancement. It is human in the loop as far as AI is concerned. It's not human without the human AI. When we look at Quess internally, today our largest activity in the business is to mobilize and source talent from across the country for the 6,400 towns and cities where we have people. We use AI for this kind of a matching and this kind of an algorithm building across the right talent and the right customer at the right time. The second is the layer of payroll, the compliances, the operations. Again, AI enables us to play a huge role there. We manage almost close to 500,000 workforce. So to be able to address queries of our workforce, to be able to help our workforce navigate and guide what their challenges could be. So on the productivity front, companies like us are benefiting superbly as far as AI is concerned. And this is a path which we'll continue to take in the next couple of years. I'll come to the larger ecosystem and landscape. In the IT industry, a lot of transactions which used to earlier happen, a lot of coding or a lot of matching which would happen, this has definitely started to become more automated. There are agentic pilots, there are co-pilots, agentic AI, which is supporting some of this entry-level work which used to be done. But what is happening is it's also transforming the work into more higher degree of activity. So when you see GCCs coming into India today, they're not just coming for transactions anymore. They're not just coming for cost saving anymore. They're coming for transformation. They're definitely coming to build IPs. And the talent which is available in India, combined with the technology which AI can give us, will only increase and fuel demand for countries like India and for assignments like what we support our customers.
That's pretty interesting, Lohit ji, and you actually saved my time. You answered yourself on the GCC explosion which is coming in, and of course your company is a very important part of that. But the overseas business, let's have a talk about that also. How has the performance been? What's the outlook looking like?
So this year we've grown, like I said, 26% EBITDA year on year from our overseas business. Our combined overseas EBITDA now stands at 7%. The highest among our pack and the largest contributor to this profitability is Middle East. Middle East is doing significantly well. We are both in Dubai as well as in Abu Dhabi. Our teams are busy at this moment to see what we can do from the Kingdom of Saudi Arabia. As you know, Saudi Arabia and the crown prince there and the leadership is expecting to expand it into non-oils and non-gas economy as well. And in the years to come, that is an area where we see a lot of economic explosion to happen. Our second unit is Singapore. While we've had some headwinds in Singapore in the last 2 years, but our team has built a new line of business, which is beyond technology into general staffing as well. It continues to contribute the second highest profitability for us internationally, followed very closely by Philippines, Malaysia, as well as Sri Lanka units for us. I must say that this has been a year of transformation for us internationally. While in Singapore, we were always known as an IT services company, we've expanded and launched a general staffing business. Now close to 400 contractors in general staffing also work. On the other hand, where in Middle East we were known as a general staffing company, we've added the technology transformation activities. We are now close to 100 people in technology there as well. So everywhere in Quess, the theme is very simple. What we do, we have to double down and double ourselves in the next couple of years. What we don't do is a blue ocean that we have to work towards.
Well, thank you very much, Lohit ji, for taking out your time and giving your views on the company and the industry as a whole. An important takeaway from this conversation was definitely that AI is kind of impacting even the staffing solutions coming in. But the GCC explosion in India, that is where the street is very bullish on. And of course, industry-specific news flow and the company-specific momentum is something which the management has spoken about. The ROC number, that was very important to track. They might end 20% plus at the end of this year. But there was a minor error, but I just wanted to revise the analyst community's call. 7 buy ratings coming in and 1 hold, not a single sell rating coming in, and likely return, it's eye-watering 43% in the next 12 months for this stock, Quess Corp. So it's a very strong thumbs up coming in. But let's just revise the ratings which we have given in KYC for Quess Corp. We had a conversation with the management and it seemed like it's a optimistic kind of a tone in our conversation. Income statement, balance sheet, cash flow, largely it's been just a very short time of period after the demerger. So the numbers largely have been decent, but my concern was on the return ratios, but the management answered that query. Shareholding, we see the DIs have been taking their higher exposure, but on the other hand, FIs have been reducing it. So it kind of balances out, but the retail participation has gone up in the stock. But the concern is, of course, on the returns. The returns haven't come in for the investors. Only the last 6 months or so, they have seen a big sell in this counter as well. So the stock needs to go up going ahead, and of course the valuations front was very good, and the outlook, talking about it, that also showed strength. And overall KYC rating, we have given 4 out of 8 for Quess Corp. So this is the entire picture for Quess Corp. I have given to you, simplified it, and also giving an angle to the AI. That's all folks for KYC. Stay tuned to NDTV Profit.